the Accounting Play podcast to know your numbers and to know your business. It is April 4th, 2020 on the Accounting Play podcast. Today we're talking about the SBA emergency loans, COVID-19, the EIDL, emergency lending, and the payroll protection program. In a rapid form, we're going to try and cover these major developments from a CPA's perspective. I've had a lot of opportunity to be one-on-one in contact with various lenders and clients, small business owners, to try and navigate these difficult waters. Also, I have regular clients that are affected from job loss, and so we're trying to get them money in any way we can. So in rapid form, we're going to try and synthesize and discuss all of this so that you have enough information to hopefully tell a friend to apply for something and to get an idea of where this $2 trillion stimulus is going. I will try and approach this as if it was a client or kind of educational seminar. The next step would be to further research this yourself, and then I would find a CPA, labor law attorney, and even maybe a benefits specialist, depending on how big your business is. Welcome to the show. This is John Gillingham, CPA. I work with small business tax and accounting clients, equity compensation employees in San Francisco, and develop financial education apps. Our latest is Write-Off. Practical disclaimer here is that this is educational, not tax, legal, or investment advice. These programs are changing on a daily basis, and we also don't even know how it's all going to play out, how it's going to be administered. So the goal here is to give a time-sensitive overview and encourage you guys and gals to get the proper help. And tell a friend, please. So as a business owner and being in the business of helping businesses, I'm in a unique position here of understanding of what's going on or not understanding. There's a lot of confusion. So at this point, we're over 1 million worldwide COVID cases. I myself being recovering from some sickness where there's no test even being available. So the deaths and the economic hardship are going to be adding up, hopefully not exponentially, but it is not getting any better out there. So we're going to focus on the economic side. The unemployment numbers are skyrocketing. And what essentially that is people who losing their jobs with no fault of their own are going to try and claim benefits from the state, of which also the federal government is looking to subsidize that as well. We'll kind of go into there. And so I was talking earlier, explaining this to people, and they were wondering that they're not actually unemployed. Well, they are, but they're in the unique position where there might be a job coming back to them. So this is where the government has stepped up various programs. One of them, very interesting, the Paycheck Protection Program, where the intent, as I can see it, is that the government, via the Small Business Administration, will be loaning approximately 2 months worth of payroll for business owners. So business owners might have a lifeline there, but realistically how that's going to work and get funded, I'll talk about some of those mechanics later on in the podcast. But right now, let's go ahead and address some of the major things going on. So in order to relieve the country, Congress has passed, or government in at B, the various stimulus acts in the $2 trillion range, ranging everywhere from large corporate type of assistance that's going to take place, which I am not familiar with. We're focusing on the small business owner, which at this point is less than 500 employees, or even the self-employed person. So that is another huge development here, is that typically unemployment was not available to your regular sole proprietor, that being someone in business for themselves and paying their largely responsible for their own insurance and their other benefit type of program. So imagine someone who is a gardener and they work for themselves and taking their checks, claim money on their tax return, pay taxes. So typically, they've been largely not able to claim unemployment because they can't fire themselves, so to speak, or at this case, lay themselves off. But we will go into that as well. So all of this money is looking to find its way into the hands of U.S. citizens, as well as various medical type of interventions, Army interventions. But we're talking about the almost 30 million small USA businesses. I heard in the White House briefing, that they feel like the small businesses account for about half of the economy. Of course, that could be debated as well as these numbers, but the demand is absolutely gigantic, with a lot of these small businesses offering less and less safety net for their employees, as well as the owner employees, someone like myself. So this episode is brought to you by my CPA firm in San Francisco, Gillingham CPA, where I mentioned we're helping our small business owners through this, and Write-Off, the app that teaches small business savings, taxes, and structure all within the app. So go ahead and get that Write-Off for free. It's a boxing match. It has political characters in it. It has large portions from the Know Your Numbers course in it, and it's free. So if you're at home, and hopefully you are voluntarily or otherwise, that you can learn. So let's talk about the major points of what the heck is going on and how the government is trying to pump more money into the economy, and how might all our listeners benefit from some way or the other, because that's the ultimate goal here. Is the government doesn't want to, it's not even whether they want or not. Congress is pumping money into the economy. I think the President Donald Trump is extremely concerned for his legacy and the economy and these nearly uncontrollable numbers. So we can go a little bit off topic on and see how I see some of this stuff playing out politically as well. But the economic rationale is pretty obvious. People are not being able to work. They have to pay rent. And another casual statistic I've been hearing is basically half of Americans have no effective savings. So it is going to be interesting to see. Let's talk about individual employees or laid off workers, or just U.S. citizens. So there are IRS provisions that have changed. There's the unemployment and changes, as well as these stimulus checks. So the unemployment, typically how that works is that I am an employee, let's say, from an airline, and for no fault of my own, there is no job for me right now. So I might make around $50,000 per year, and then I apply via unemployment, typically with the state of California. That's typically how it's working. I believe that, correct me if I'm wrong, but the state comp fund. And so essentially the business owner is paying a certain percentage of wages in a form of kind of unemployment insurance, so that if this person doesn't have a position anymore, that this sort of quasi-government entity or full-on entity can pay these people. And typically what I've seen is about $1,000 a month. But what's happening is that the federal government is looking to subsidize these unemployment benefits closer to $2,400 or $600 per week to get more money in people's hands, because the idea of unemployment is that you are getting it while you are also looking for a job. It's not simply go hang out for 10 weeks. You're supposed to be saying, oh, I'm looking for a job and here's how I'm doing it. Now, the mechanism to grant this to the millions and millions of unemployed coming down here is going to be very difficult, but it's happening. So for these matters, I urge everyone to call their state or see if the employers can help in any way. Expect amazingly, terribly long hold times. But typically with unemployment, at least in California, let's say you were laid off mid-March and you don't actually get unemployment, as they say, until April 15th, a lot of that's going to be retroactive. So just hang in there. If you can defer your mortgage payment with your bank, that's something that's been discussed, or your rent payment with your landlord, please do. A lot of evictions, there's moratoriums on evictions in various ways. So do take care of yourself and your family. Be careful with how this money is going out the door, because unfortunately, we also don't have amazing guidance on how long this is going to last. So in San Francisco, thank goodness, in my opinion, we were locked down very early, or shut in the house. We can go take a run, things like that, but there's a lot of strict protocols in place to slow that curve, slow that infection rate of the new cases. Now, realistically, I don't think San Francisco is going to have any changes in this. At this point, it's officially throughout April, probably May, and then what I anticipate, everyone's got an opinion, of course, but a very slow going back to work protocol, and those who can work from home will be either forced to work from home or will be in a very good idea that we, as companies, will be working from home just because it's common sense to stem that curve. We will have to see. So we discuss unemployment. We have the stimulus checks. Those are fun. Typically, generally speaking, if you made under $100,000 on your 2019 tax return, or if you did not file 2019 yet, but you did for 2018, if you made 50 grand, I think you get the full 1,200. There's a phase out as you get closer to $100,000. Of course, there's all sorts of issues with this. What says that someone who doesn't have this extremely low year for 2020 doesn't need this check? There may be some provisions for people. For example, if there is a waiter that made 100 grand, probably rare, but these things can happen, or a bartender, and now their income's gone to nothing for 2020, there might be some relief for that person on their tax return or otherwise. A lot of this stuff is rolling out. There's also different numbers for married filing joint, as well as benefits for children. So for some people, this is going to be an extremely valuable lifeline. For other people, it's going to barely do much of anything. We will see those things coming down supposedly in a few weeks, and that is supposed to be done for via direct deposit, because I don't think they want people cashing those checks and going to the mailbox and creating any more movement that is necessary. So there are some places online where you can sign up for that. Hang in there if you're a small business owner, or fast forward to the juicy stuff for the bigger money. But right now, after starting with individual employees, we can kind of go into a little bit into the realm of the IRS relief, or what largely are going to be a lot of tax code changes. My first and most exciting one is the unprecedented change in the tax return and payment due date of July 15th. So I think that's tremendous. It gives everyone more time as they adapt to teaching their children from home and not making money, or maybe even learning how to cook or debits and credits. Who knows what people are doing out there. You can still file your tax return now and then pay later. So some people are going to be owing a lot of tax. Go ahead and get that tax return in come May, and then you still should be able to pay July 15th. I know California is fully conformed to this. Most likely, most other states will also. There is, I believe, relief on the quarter one deadline. The IRA, individual retirement account contribution deadline, I believe, also moved. So you can focus on family first, conserve that cash, like I said, because when it's gone, and you can pay your taxes, if not July 15th. The IRS has a lot of generous installment payment plans. Generous, I think it's good. So if under $50,000 owed, that's typically an arrangement that you can make one-on-one with the IRS. So if you have to not pay tax, and you can get on an installment plan with relatively low interest, that might be something to pursue as well. A lot of people are going to be scrambling and borrowing from various different sources to kind of steady out that cash flow and to also avoid predatory lending or really high rate lending. So we want to be very cautious on how we're using our money. I am trying to keep the money moving. That's why I'm drinking this delicious LaCroix and drinking espresso and everything else I can get my hands on. Delicious. Get an espresso machine. It's amazing. It's amazing. Okay, so IRAs. Typically, if you withdraw from those, this being a pre-tax IRA, or let's say your typical 401k plan, not a Roth version, that you are going to have a 10% penalty. California even throws on a 2.5% penalty. So this time around, you can access that. So that could be a good planning mechanism, or if you just need the money, that's going to ease the pain a lot, because if a family, it's unfortunate, there's going to be hard-working, successful families, financially successful, conventionally successful families who made $200,000 last year, and they're going to see their income go to almost zero, or maybe they're going to collect unemployment and just be on this steady drip. So there's going to be some big gaps to fill and car payments to make. And so those same type of financial profile people, they might have $100,000 in an IRA, and some of these people might need to cash out some pretty good amounts. Postponement of required minimum distribution. If you're forced into taking distributions, those apparently are postponed. Probably the government wants to keep more money in the stock market and not force people to take losses when ordinarily they think that stuff's going to come back. Also, as they say, a little inside baseball or something for our CPAs, there's something called a net operating loss in a business. And essentially, if you have a big loss, so you're below zero. Let's say you are a restaurant and you manage to stay in business, it is very possible that for 2020, you're going to be at a loss. The rent is high, and let's say there's a $100,000 loss in the restaurant. You can take that $100,000 loss now. The rule has been in flux and changed, but now they changed it back so that you can apply that loss in the past, so 5 years back. This is a case where essentially you say you have a loss this year. Let's see what the CPA can do to get some of that old tax money back, or you want that money to carry forward. But I expect restaurants to have an extremely slow opening with social distancing provisions in place, which is going to mean half the capacity, as well as surely updates to our health codes, et cetera, et cetera. We're a long way out on vaccine, and we might have some other great things like antibody testing and ways to treat this thing, but it is happening. It is going to happen extremely slow. The Families First Coronavirus Response Act. This is a much more, another technical piece of this legislation, and this can be sick time related. Also note that there is going to be some, payroll options as far as deferring the payroll tax. That could be, it's kind of like a last-ditch measure, and then also there's going to be some tax credits on retention of employees, potentially, or tax benefit there for severely hard-hit businesses. I believe this is actually where they have a provision that there has to be a certain amount of revenue loss. Essentially, it is a fun house of benefits for individuals and businesses. The big difference is that the business owner has a tremendous amount of flexibility and need to explore different options, as well as to do it properly, cost effective. The individual is going to sort of get what they're going to get. So it's very important, obviously, get your stimulus check, get on unemployment, see about any healthcare benefits. For those still working on this sick time related, there's some business benefits there, but what it also enables people to do is take more sick time effectively. So a lot of employers, they can't afford these types of benefits, but the government is sort of stepping in and allowing for that. Lots of things going on. So we talked a little bit about those payroll options. Trying to think if there's any other things for individuals. Tax planning in general, if you have a really low income year and you have assets in an IRA, you don't always have to just withdraw them to take advantage of kind of like your lower tax brackets, your lower rate. You can also convert some of those traditional IRA assets into Roth. Now, a lot of the hardest hit people in this economy, unfortunately, are also the ones, very sadly, that probably have the lowest savings. So we're talking about restaurant employees, we're talking about concession stand employees. They don't always have that flexibility. The bigger businesses and the smaller businesses, you need to get in touch with a great CPA, someone who plans, not just a tax return preparer, but someone who can get you in line for these programs, make you aware, also ensure compliance, because you don't want to be forcing sick people to work. It's illegal. There might be money for you anyhow. Now, there's also a big new distinction, or less of a distinction, but rather the new development of employee versus independent contractor. And so what's going on here is that typically, as I alluded to earlier in the podcast, that if you're self-employed, meaning you take in the checks, you're your own business, you might have employees even, it might just be you. For a long time, or even maybe still in some states, Uber drivers were independent contractors. And so all of a sudden there's no work, they're effectively laid off. They can now attempt to collect unemployment. Or if you're that gardener and all of a sudden you want to do work, but everyone's saying, hey, I can't, I'll mow my own grass, or I don't want someone coming into my space. So now independent contractors are also finding ways to claim government aid and government benefit. We just have to get on hold, get on the phone, and see what you might be eligible for, which includes these SBA programs, which are extremely interesting, very potentially valuable, and also have some difficulty. So when I'm talking about small business, I'm also talking about independent contractors or sole proprietors. Now, the distinction in my tax world of what an independent contractor is versus a sole proprietor, they're kind of one and the same. So there's a lot of confusion as to what is what. I do not have the guidance on that yet. So just to recap on the individuals, I think we talked about the sick time, also medical care, medical leave. Just investigate how your insurance is covering you. Is there any benefit there? If you can't afford insurance anymore, does your state or local municipality allow for any type of insurance? California, for example, a lot of people, they're probably paying $500 a month. Now they're unemployed. Their income is nothing. They might qualify for Medi-Cal if they're definitely on the lower income, lower asset side. Or even San Francisco has its own kind of thing, Healthy San Francisco. So all these little things need to be explored. If your internet's really expensive and all of a sudden you don't have the same money that you have, some of these internet providers and cell phone providers are also doing their part to try and make things a little bit more affordable for their benefit or the benefit of all. But it is nice to see. And so maybe a part of that, we're trying to get out this information to people so we can get the money in the pockets. A large, unfortunate byproduct of this all, this government-administered bailout, is that there's only so much money at the moment, and the government does not have, we don't have the infrastructure in place to treat these sick people, most importantly. But we also don't have the infrastructure for millions of people applying for unemployment on a daily basis. We don't have the infrastructure for banks to facilitate these loans fast enough. And the SBA, which we're going to talk about coming up here, definitely does not have the facilities in place. Try and call your bank, try and call an airline, try and call anything that you need right now, and it is going to be extremely difficult. I couldn't get a COVID test. I was on hours. Luckily, got some tickets canceled and refunded. And so if your ticket moves a certain amount, you can actually, only call, give it some time. You call in. These are other tips and tricks of the COVID. Call in closer to the date, because at least with, I believe it was United, if the ticket was moved more than 2 hours departure time or arrival, it's a full refund. So then you're not bothering with some credit that you can apply in the future. You can actually just get that thing refunded. Now, we're going to be talking about the economic injury disaster loans, as well as the Paycheck Protection Program. These are very interesting and potentially difficult to obtain fast. And we're going to talk about the challenges or how this is working. Number one, these are for businesses less than 500, typically all for USA businesses and USA compensation. But these sole proprietors, independent contractors, the second part of this program for the Paycheck Protection Program, they're going to start rolling that out. And I'm going to talk to you some challenges with that program and just practically speaking. So the SBA, Small Business Administration, I have been interested in the SBA process myself. This is essentially a government-backed agency which facilitates lending in some kind of complicated ways. So traditionally, the SBA, you don't apply directly to the SBA for a loan. So let's say I'm a small business, I need $100,000 for working capital. I would have to have a certain track record, financials, a certain business profile, and I would be typically working with my small and local bank. A lot of big banks don't deal with this, probably because it's time-consuming and not extremely profitable. So the SBA often has been administered by local credit unions, more niche banks, I guess SMBs, small, medium business type of focus, although the big banks can do them. So what happens is you essentially, it's kind of a mix of a guarantee from the government, and then the bank takes a certain amount of risk, and you get your money at pretty good preferential rates. So those traditionally could be in the 5 to 10% range, after fees and everything, with good terms. So there's not a lot of people out there, friends and family, to say, I need $100,000 to hire some new employees, or much bigger loans like, hey, I need $2 million to make a car washing station in Missoula, Montana. This is where the SBA comes in and helps facilitate these types of loans and kind of guarantee them, just like the government helps to kind of guarantee the mortgage process. The government and the banks are all kind of similar together. So let's talk about the direct lending that the SBA has done traditionally and what is coming out. So the economic injury disaster loans. This is a program where typically there is some natural disaster, essentially no fault to the business, and the business has exhausted all of their options. For example, a business gets wiped off the map by a tornado, and insurance only covers half of it. The last line of defense after they've exhausted all the personal resources might be this economic injury disaster loan. Now we have COVID, and they are treating COVID very similarly in that, well, not similarly, it's actually all rather completely different, but essentially because COVID has impacted everywhere, and no one really needs to argue that, and it's only in extreme niche cases where someone might benefit from this, that they're essentially saying, look, everyone's injured. So they rolled out a very specific program, one that you just go to the SBA, and you can look into the COVID disaster loans. And the idea is here is a certain amount of money set aside. It might be $10 billion. I don't know. These numbers are so big. But I am encouraging all small business owners and sole proprietors to apply immediately as fast as you can. And this is a little bit confused, but on the onset, there may be a $10,000 grant tax-free. That could have some interaction with the Paycheck Protection Program. So you can't just get free money everywhere all over the place and not have any repercussion. However, the $10,000 is a grant. What's the problem with this? I think if the math serves me correct, it's something like this could be 1 million businesses get $10,000 to do stuff with. Now, the criteria is also extremely sketchy at best. You simply fill out the application. They're looking at 12 months of income, which is the revenue coming in, or really revenue minus cost of goods sold. And they're looking February 1, 2019 to January 31, 2020. So there's going to be millions of applications, and many people who need it desperately and those who maybe need it. I don't believe any of these have funded as of yet. This is April 4th, 2020. Maybe some oddball thing, but the president has been emphatic about getting money into people's hands as soon as possible. This is unprecedented. It's basically a race for small businesses to try and get 10 grand. And who wouldn't want to get in line first for this? If you haven't done so, go ahead. Even if you think it's impossible that it's going to work, go ahead and submit the application and see what happens. Also confusing is that I am not sure if it's just 10,000 or if they're going to offer to lend more. Because I think the original intent was the first 10 grand is the quick one, and then they're going to overview the business to see if there's a true economic injury, particularly in the case of a restaurant. Now, the excess of $10,000, this is what will be a very low, or who knows, maybe no interest rate loan over a certain amount of time period. The question is, who's going to get this? Is there going to be more money authorized? And who is going to go through 1 million loan applications? Don't ask me. So that's the economic injury, and that's going to be direct through the SBA. And you're pretty much just stating that there's a certain degree of economic uncertainty. We could take a deeper dive in the application at a later date, but just get it in. The issue is the stuff is fluid and changing, and so is the funding and the criteria. So we don't really know how it's going to shake out. Now we're on to a very exciting program again called the Paycheck Protection Program. That's a lot of plosives. That's why we have this P filter. Okay. What is the deal with this? The Paycheck Protection Program, PPP. The way I can best describe this concisely, I believe the intent is to essentially provide a business with enough money to pay 2 months of rent, 2 months of payroll, and with rather limited stipulations as far as long as you're keeping very consistent to the prior year. And we can come into some of the math. There's also maybe some provision for some healthcare costs, payroll costs, as well as maybe even interest. Now, they are applying, the applications are very focused on payroll right now. Again, this program is also going to be opened up to sole proprietors, people who don't actually run a payroll. So it's mostly C corporations and S corporations that run the majority of the payroll. They're all sole proprietors that also run a payroll, but it gets complicated because you have what the business owner is making, which is like a profit figure, and then what they pay other people. And those could be a lot of restaurants. Would not be surprised. And then there's also different business structures that complicate. But right now they're mostly focusing on opening it up to payroll type of businesses, because I think that's going to be the easiest for them to actually cross-check that this application's legitimate. So let's go into the weeds a little bit going on here. So I mentioned the 8 weeks figure, and they need to have a way to calculate that. So depending on when the business started, whether it was in 2020 or prior, there's various time frames that they're looking at. And now for most people, that's going to be tax year 2019. And so they're trying to say 2.5 times the average monthly qualified costs are going to be the costs, is going to be the amount of the loan, or the forgivable portion. So let's just talk about let's say $10,000 a month is someone's average payroll, rent, maybe even utilities. But now they're trying to limit the amount of rent and utilities to maybe 25% of the total loan. It is going to be extremely confusing. But let's say we have 10,000 qualified costs average per month. You're now talking 2.5 times the 10,000. So that's going to be $25,000 loan. Now, when that loan funds, let's say May 1st, which is optimistic, then the business owner essentially has 8 weeks to use that money for qualified purposes. That's typically going to be paying rent and paying payroll and maybe a little bit of health insurance and utilities. So as long as everything's really consistent compared to the prior year, or even a little bit more, it might be very similar. So let's say owner gets the $25,000 loan, and then they spend the $25,000 in a qualified way. I think the business owner's compensation is qualified. Also note that independent contractor expenses also might roll into that 2.5 times calc. But essentially, idea for the podcast is just to give you an idea. Essentially, you run the calc, you get 25 grand, and then you spend it in a non-shady way according to the program, then that's forgiven. So this is tremendous opportunity for all businesses. If it's a restaurant, they can essentially survive for another 2 months, or pay their rent, pay their staffing. Now, is 2 months enough? That's going to be a huge question, but that is going to give the opportunity to keep people on payroll, or to rehire them at least for 2 months. Now, there is some nuance and sort of clashing or contradictory type of benefits here, because if you take your average restaurant employee, and if they're making $2,000 a month in the Midwest for whatever reason, especially if most of their income's tips, it might be much better for that person to be just laid off or receive what might be $600 a week for unemployment compensation. So there's some tricky calculations where businesses that are truly shut and shuttered have to decide, is it better for me, is it better for my employees to pursue this paycheck program, or keep them unemployed? They should pursue the paycheck program anyhow, because if they get that 25 grand, it's going to be at preferential rates, and they're going to need or want that or more money for operation period. Once they receive the money, then they have to decide, do I rehire the employees and pay them with this money or not? For businesses that are still productive, like let's say someone who does computer programming and they have a shop of 10 people, this could be a tremendous bonus for the owner, essentially. So that becomes a little bit more confusing. It's like an owner is going to essentially get 2 months of a large amount of business expenses for free. So that could be a tremendous bonus to a business. Hopefully, there's going to be some mechanisms and checks and balance. But as far as that spending, because you take the example of a pretty stable business and they're applying for this thing, I think that they have a full right to apply if they think their business might be affected. And so there's the decision process of who deserves this and how this money gets to be spent on this application is almost non-existent. It's pretty much a box that says, do you think you qualify for this thing? Now, this application is changing and changing. Now, how do you apply for the Paycheck Protection Program? That is the That's not the $10,000 question. That could be the $100, $200 million question. These can be some very large loans. So this is separate this is not the economic injury disaster loans. There might be some interplay where if that same business owner took the 25 grand and the 10,000, that 10,000 might actually still be forgivable, but there can be some interplay as to how much will ultimately be forgivable. Generally, unless this business is booming, like they're an SBA lender, let's say, I think businesses should do the applications, and they can always say, oh, I don't need this, I don't want this. And then the ultimate funding and the lenders are going to have to, I don't think much, if anything, has been funded yet. So there might be some changes in how they prioritize these loans or follow up. Now, what is this process? A major, major problem. So you have the economic injury disaster loans, the 10 grand. Okay, number one, it's probably not enough money for everyone. Number two, how are they cross-checking this? And how is the SBA going to process all of that? With this PPP, this is more of a slightly more traditional process in which the lender, in this case, the bank, needs to gather the documentation, do their due diligence, and then submit it to the SBA for final approval. Now, the banks technically have some risk in performing this loan, and not always a huge upside, especially since some of these loans might be $1,000, especially with the sole proprietors. So what we're seeing now, as of Friday, is that banks are essentially saying they're not going to do it right now, or you submit the online application, it says, we'll have someone call you. And then those who've been taking applications, I've seen them also close. There's some technicality as to why this all is, but essentially the banks don't have enough guidance and don't necessarily have the incentive to make these loans, because it could be so small that the cost to service the loans or simply collect the money and pay it back and deal with all the people is going to be more than the actual loans. So major, major problems. People are not being able to apply now. Nothing's actually funded. And then there's not amazing guidance for the lenders or those applying. Right now, I think they're going to prioritize and look at businesses that have a payroll, because quarterly payroll reports are filed. So it should be pretty clear to see that, oh, these people, they filed their payroll forms, or they also filed 1099 miscellaneous forms for contractors. So I think that if they triage this into those that have filed the tax return and that have all the information on file, check, and cross-check, that could be one way to do it. But as far as I'm aware, this is like a first come, first serve type of program, and there is no great facility to do it. So there's a lot of people out here that desperately need and want this, but they can't even apply. So these problems are going to sort themselves out, let's say, but it's going to be interesting, to say the least, to see how it's going to actually work. So, in a nutshell, the Paycheck Protection Program is looking to give the business owner about 2 months, 8 weeks of expenses, which is surely not coincidental as far as some of these lockdown timeframes or whatever you want to call it, social distancing, restaurant closures, etc., is going to happen. How these businesses are going to survive, ultimately, I don't know, but these are all the programs that we want to get in line for and be smart about. Let's talk about interest rates a little bit. So interest rates have effectively almost gone to zero. That is on the Fed rate. Now, these rates sort of increase incrementally as they sort of flow through the lending system. So, banks aren't doing 0% loans because they still need to make some money on it. And so what you're going to be seeing is that interest rates for mortgages are not going to be zero. Although that would be fun if you simply took, $1 million house divided by 30, and that's how much you're paying. That would be like a sort of like a Japan type of situation. But interest rates are fully at zero. But banks aren't lending because there's too much uncertainty. They don't necessarily have the guarantee, and they're going through their own problems. So there's a lot of push for liquidity, but not the mechanisms to actually get it to people. So as a CPA, I'm just saying try and be careful with your cash, get in line for all the programs, stay educated, and depending on the severity of the situation, you really need to be checking the news daily and seeing who and how these things, who's funding these loans, how is it going to work, what are the realistic timeframes. Conventional credit is very difficult to obtain right now, not to mention even getting a line of credit with a big bank that these days, right, 2020 or pre-COVID, it was also difficult. They weren't just issuing money to everyone. So it's pretty tough. So thank you so much for listening. Do get the Write-Off app. We worked really hard on that. We have the courses at accountingplay.com. You can email me, john@accountingplay.com. I do not have any magic information about all this stuff. So get with your CPA and do stuff yourself. Another note, there's now this kind of new overnight market where there are CPAs and also just people that are charging to do these loan services. And I think that's going to be a mixed blessing, because some of these things like the economic injury disaster loans, that a person might not even need a CPA to help them with that. It might be a 10-minute application and you're just trying to get in line. And similar to the Paycheck Protection Program right now, you're just trying to get in line. So I would say, action first, and just be careful of those charging big fixed fees, like $2,000, for example, because technically certain individuals like a CPA, I think you can charge $2,000 just to do one of these little applications. So I am having most of my clients just go direct. Of course, we need to do a little bit of accounting work sometimes. We're going to have to gather up documents and do some assistance. But I would be weary of people charging a lot. However, there's going to be certain people that are very inept with technology. Practically, believe it or not, there's just going to be illiterate people that run successful businesses, and so they are going to need the help. So just be careful. Make sure you know what you're getting into there. I think we're all in this together. I think we can sort of urge our governments and to have these programs work in some kind of like a systematic and triaged way. I don't believe you can have rely on morals or citizens to not apply for something that they do qualify for. So I think the intent is that everyone should be, not everyone applying, but most people should, but there's no way that this thing kind of shakes out. Unfortunately, I would like to see some kind of triage and needs-based lending, not on a first-come, first-served basis. This is all going to be kind of administered by these various government entities or quasi-government entities. So we'll see kind of what happens. So we're in this together. And literally, if we just stay at home and chill for a month, this thing could be almost away. So I ask small businesses to do your best to please encourage not to work in person. Do what you can to get people in the office and off the construction site. I know we have mouths to feed, but this is a sneaky disease, is COVID, and I really think that it's more contagious and the numbers are more high than you can ever imagine, and the distance between people, 6 feet, might not even be enough. So we really have to realize people are carrying this and transmitting all over the place, young people to old people to young, etc. We just need to chill out and put the world on pause. I think there's so much to learn from this, and and certain people can come out stronger. Unfortunately, a lot of people aren't going to come out, period. But if we could just work together, let me know your thoughts. Thank you so much. And we will keep you posted as greater developments come through on this or in the accounting world. Otherwise, just stay posted, and all the best during this time. Thank you.
You have been listening to Accounting Play and Know Your Numbers. Check us out at accountingplay.com, and if you need a CPA, check us out at gillinghamcpa.com. Until next time.